So today what I want to talk about is how to get your first private investor. Now, a question I get all the time is, Jerry, how do I raise private money to do deals? And in particular, how do I get private investors to fund me on my deals? And so I want to talk a little bit about that and give you some tips for how to do that and be effective at doing that. So keep in mind, when I'm talking about a private investor in this instance, I'm talking about an individual, maybe an entity, but it's a private individual or private entity. So it's not hard money, institutional money, it's a private individual. Maybe it's somebody that you know that's got money that would be willing to invest. I've got a lot of investors that come forward and say, Jerry, I've got 50,000 in my IRA or 100,000 in my IRA or whatever, can I lend you this money on your deals and get paid a rate of return, right? And so these private investors are out there. Imagine this, imagine if you had 10 private investors that were willing to lend you $100,000 each. That's not a lot of money. You'd have $1 million to do deals with. And so it takes some consistent effort, but you can build up your own private money, list of private money investors that will do deals, that will fund your deals. So first of all, let's take a fix and flip. Let's say you're gonna buy a property, and let's use real simple numbers. Let's say you're gonna buy a house for $75,000, it needs $25,000 in work. Okay, so $100,000 total capital. And you're looking for a private investor. Okay, tip number one, first strategy that I recommend is if you think you know somebody that would be a potential candidate, so somebody you may know that has capital or you think they have capital and they might be interested in lending that money to you on your deal. Okay, first of all, make sure you have a deal first. Now this might be a little counterintuitive to what some people say, but what I recommend is get a really good deal under contract during your due diligence period, and then go to that private investor, take them out to lunch, sit down with them, and explain to them, here, I've got a deal right now. There's something so much more powerful than when you sit down with them and you say, hey, I'm an investor, I flip houses, and here's what I do, blah, 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 can you lend me money? But you don't have a deal, right? Don't waste their time, don't waste your time, get the deal first. And then when you have that deal, then sit down with them and say, look, here's the deal. Tip number two, do all of your homework. Lay that deal out in front of them and say, look, I've got this deal under contract. Here's the repairs. Here's my bids from contractors. Here's before pictures, so here's what it looks like right now. Here's all my comps for what it'll sell for fixed up. Here's the numbers. And you break it down for them and you say, look, at $100,000, I can sell this for $150,000. You're at a really strong equity position or loan to value, and explain to them that, show them that you have confidence in your deal. And the more confidence you have in your deal and the better you can break it down and show them the numbers, the more willing they will be to lend you the money to do deals. The second thing you want to do is never ask that investor to fund everything 100% and you don't have anything out of pocket. Now, it'd be nice if that were the case where you could just say, I don't ever have to put a dime into this deal. My investor is going to pay for everything. So here's what I do. Have them pay for the purchase, right? That's easy. Have that money never touch your hand. So in other words, they can send the purchase money, in this case $75,000, right to the escrow for closing. Now, why is that important? That investor will feel so much better knowing that they're paying directly to the title company on that purchase than if the money's coming to you and then you're going to closing with that money. Don't even do that. Don't touch that money. Let them pay it directly to the closing. Step number two on the rehab, instead of saying, look, I need you to write me a check for $25,000, I'll then take that money and I'll manage the renovation and pay contractors. Instead, you'll have much more success if you say to that investor, the rehab's $25,000, I'll put $5,000 or $2,500 or whatever. I'll put money in first, and then I'll submit to you for a draw. So then they're never giving you money up front for work you haven't done yet. Does that make sense? It just makes them feel so much more comfortable. So what I'll do is I'll go $5,000 or $10,000. I'll then submit to them. I'll say, look, I did this work. I'll break it down. I'll show them pictures, receipts from contractors. They'll then pay you back, let's say $5,000, reimburse you $5,000. Then you take, your $5,000 again and you do the next $5,000 in work, do another draw, right? And you just, that would be 5 draws for a $25,000 rehab. You've got to have $5,000 to float to be able to do that. But I'm just telling you that will get that investor so much more comfortable to want to do a deal with you, to lend money to you. And by the way, I make it very clear to my investors that I'm only paying interest on money out, right? So I'm not paying for the full $25,000 up front in interest because I'm not receiving it all at once. I'm receiving it in draws, right? So it'll be prorated based on when you get the money. The third thing I want to just kind of throw out there and give a suggestion is offer that investor that you'll split profits. Okay, now you could get that investor to be strictly a debt investor where they pay a 10% interest or 8% interest or 12% interest or whatever, and they just get their straight interest on money lent out. But what I did when I first started, when I was building my private investor list, is I said to them all, here's the numbers, I did everything I explained, but then I said, look, we should make $30,000 on this deal. It should take me 4 months or 5 months, and I'll split that profit with you 50-50. And that's just a great way to start building that private. They're going to be very excited about that type of return on investment if those numbers are strong enough and they're good enough. What I did is over the course of a year when I first started is I did exactly this. I would sit down with anybody and everybody. My goal was at least once a week or even twice a week to sit down with somebody I thought had capital that would be willing to lend it. And I gave them my presentation. In fact, I did a formal, I had everything all printed out and really nice. And as time went on, I was able to then switch my investors to straight interest, right? Because I got more confidence, I got more deals under my belt. And over time, then I was able to really build a big private investor pool of money to do deals. And most people, they're intimidated by that. They're worried about doing that. But if you follow these steps I've outlined here, it won't be long before you've got these private investors, and now you can really go after deals in a big way. And I hope you found this tip helpful. Jerry Norton here. I'll see you next time.